Greetings. Welcome to my weekend market roundup, 8th January 2022. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagarnandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I use the Q systems for making trading decisions. They run as add-ons to the TradeStation and Metastock platforms. That was the last slide. Let's continue with the live system. As usual, we'll start with a look at the global markets. First, Australian Index AXJO. In the weekly, sorry, not AXJO, this is all ordinaries, AORD, Australian Index. In the weekly, it displayed two indecision at the top, bearish indecision in successive weeks. That is showing indecision, and we are not going to take any directional trade in the Australian index. Daily is still in an uptrend with higher low, higher high. However, looking at the weekly, we are not going to take any trade in Australian market right now. For short-term trading, it is still in an uptrend in the daily. Topics index, Japanese market. In the weekly, it is inside the triangle pattern near the upper edge of the triangle. In daily, it is in an uptrend, not far from the trend line support. Uptrend because it has higher low, higher high. Daily is an uptrend. However, similar to the Australian market, looking at the weekly, we are not going to take any directional trade. China market CSI 300 index. This is moving inside a range in the weekly, also inside a range in the daily, created by trendline resistance and support. We are not going to take any trade in CSI 300. For short-term trading, it is sideways, moving sideways. UK market FTSE index near trendline resistance in daily and weekly both. For the immediate few swing low and swing high, it was going up. So in the daily, for short-term trading, it is in an uptrend, but looking at the proximity to the trendline resistance in both daily and weekly, we are not going to take any directional trade. Lastly, India's Nifty 50 index. For short-term trading, for last couple of weeks, daily is in an uptrend. However, on Friday, we had an indecision at the top. Thursday, we had a bear release. Price is near the upper boundary. Bullish, but too far away from the recent low we are not going to take any long trade, and there is no short trade setup. Weekly is also bullish. That was a quick look at the global markets. Most of the global markets are in an uptrend now in the daily with higher high, higher low. However, none of them are at a state where we would like to initiate a new long position. If we took a long position earlier, say in the Indian market, then we could continue to hold them. I will not buy right now because price is already some distance away from the recent swing low. What about the USA market? Let's look at the market ETFs. SPY in daily, it is still in an uptrend with higher low, higher high. Unlike the global markets, it is not near the swing high, it is near the swing low. Friday's candle color is bearish, weekly candle color is also bearish. However, there is trendline support nearby in both daily and weekly. Looking at that, we are not going to take any new short trade in SPY right now. Now, if you look back, when price came here, that was near the watermark resistance at a level where multiple bearish headwinds came earlier that led to a price drop. Looking at all those signals, when price came here in previous two webinars, I mentioned that my preferred trading direction was bearish. However, I didn't take any bearish trade for several days because the market was not going down. In this week, the week that just passed, market started to fall down and I initiated some bearish trades and shared a few of them. All of them has given significant profit by now. Significant considering they are short-term swing trades. Once again, my preferred trading direction being bearish helped me not only avoid loss but make some profit in the market's downfall in last couple of days. Incidentally, I did share a number of possible long ideas in this area these few days. I shared the ideas intraday. At the close of the day, many of those setups were not confirmed. But if you took a trade using intraday fine-tune chart, eventually they actually went up and hit the initial profit target. I will review some of those trades that I shared publicly before knowing the result. That I shared in the long direction here, they all, if I remember correctly, all of them actually hit the initial profit target. And then when I shared the bearish trades here, they also hit the initial profit target by now, or they are in profit by now. Other people may start to identify short trades now, but right now in SPY at least, I will not short because it is near weekly and daily trendline support. QQQ, it has also fallen down from the swing high, but right now it is at trendline support, near trendline support in daily. Weekly trendline support is not far away, so I will avoid initiating new short trade in QQQ. I would have shorted at the swing high. At the swing low, it is already some distance away from swing high. I will not have a low risk shorting opportunity, and there is trendline support nearby, so I am not going to take a new short trade. Incidentally, when QQQ was coming down right near the top, I in fact shared a bearish idea on QQQ that was using SQQQ. SQQQ is the inverse ETF for QQQ. So I suggested a long trade on SQQQ, which was a bearish idea on QQQ. Let's have a look at that. This is sagarnandi.com, where I share live analysis before knowing the result under this category, 360 degrees trading techniques and ideas. This was the post on SQQQ. Let's look at that. I shared the idea 4 days ago on SQQQ, which is inverse of QQQ. And these were the snapshots as of that time. SQQQ was up by 5.6%. It gave a long breakout setup, and this I could read from QSonar that is running on TradeStation in real time. I could also use QFinder on Metastock. Either way, I could identify SQQQ breakout long trade while it was at price extreme low. That was a lucrative buying opportunity. And this was the breakout setup. We can see from the magnified chart here on the right, the candle color turned bullish from neutral and it broke above the trendline resistance. On top of that, it created a bullish reversal at pendulum low. All were bullish signals and attractive buying opportunity, lucrative buying opportunity because it was at pendulum low. I was aware of the trendline resistance that was above price. So my profit distance would be this much. My risk would be this distance. That still allowed me an attractive reward risk ratio trade about 1:1. So I took the SQQQ long trade and put my profit target as the next trend line resistance. And this I shared before knowing the result 4 days ago, Jan 4th. See what happened after that. I followed up 2 days ago, that was Jan 6th. So in 2 trading days, the long that I initiated on this day had hit the initial profit target. The underlying philosophy of Q swing trading is book profit, at least partial profit once the risk distance is covered, get your money back or most of the money back, and keep repeating that. If your success rate is 60% or higher with 1:1 reward risk ratio, you will have very high percentage return on the total capital by taking only small risks in each trade. How small? I like to take 1% risk in each trade, 1% of my equity. So I didn't wait for seeing if SQQQ was going to break the next trend line resistances. I booked profit right at that time. Because SQQQ might have gone up from there, but I found other opportunities that were lower risk at that point. Bearish opportunity. This was long trade on SQQQ, but that was actually bearish trade on the market that hit the profit target. If we now look at QQQ, you can see that I could short QQQ or long SQQQ right at the top. I'm not going to short now. I have already booked profit in that trade. And while I booked profit in QQQ, I looked at IWM. On this day, it was giving a bearish flow candle, magenta candle in daily, and also a go with flow, that is trend following short setup in daily, indicated by the red color in the ribbon. So that was a trend following short trend. And I was ready for it. Why? Because if you remember my previous two webinars, in previous two weekends, I was not looking to take long trades. My view on the market and IWM was bearish for short-term trading. IWM more so because it was already in a downtrend. It recovered from the lower boundary to the yellow direction line. Then it stopped at the trendline resistance, created multiple bearish indecision at the top, then a bear release. So I was ready to take a short trade. When I had the confirmed go with flow short setup, I initiated a short trade in IWM. And again, this I am not sharing after knowing the result. Let's go back to my website. This was the post, 13 technical reasons to short IWM. That's a lot, isn't it? 13 technical reasons to short IWM using trend following setup. And of course, you or I did not need 13 reasons, but let's look at the post. You will see how confidently I and you are able to take the trades because these are all color coded. This I shared 2 days ago, Jan 6th. Let's look at the chart as of that time and I'll read out the 13 signals. Bearish weekly candle color. So backdrop was bearish, weekly bearish, it allowed shorting. Number one. Number two, weekly created a reversal candle, and number three, the reversal candle came at weekly pendulum or price extreme high. That was a lucrative shorting opportunity, looking at the weekly color, weekly reversal at pendulum high. Next in daily, number four, cluster of bear indecision at the top. I mentioned in the master classes that one bearish indecision is to be noticed and multiple of them coming together is even more significant. So it came to a swing high and displayed multiple bearish indecision. Then it displayed a bear release signal, that is bears took control from bulls, and that happened right at the trendline resistance. Price closed below the trendline resistance. And the very next day the candle flow color turned magenta. What does it mean? The magenta candle means for a stock in a downtrend, that was the optimal shorting point. If you were tracking IWM in real time using Q tools, you could short it somewhere inside the candle itself, near the upper end, certainly at the upper half. It gave a go with flow short setup as well. That drop was associated with the biggest drop of 1 month. If we looked at the alternate signals, it broke down below the channel line. So it reversed from trend line resistance, broke down below channel line. Then we had a series of momentum signals, bearish kahuna, Mobo breakdown, bearish pocket pivot. We had one ice hole failure some time ago, 1 or 2 days ago, and also a red candle high or failed at extreme few days ago. So there were several bearish signals earlier itself, here and here. And in weekend webinars, two successive previous webinars, I mentioned I was already bearish. So when we had this sharp drop and the Goit flow setup was confirmed, bearish trade, I shared this analysis. Now, if you look at the analysis, what did I mention? I mentioned something that I usually do not do. Okay, not here. I didn't mention it here. Maybe I had mentioned it in Twitter or in the Skype group where I shared the same idea. The bearish setup was confirmed, no doubt, and I was ready to short. So I would have shorted anyway. The question that remained was whether I wanted to short using the IWM ETF or options. And if options, what kind of options? Naked or verticals? I didn't want to short using the ETF because following Q guideline, if I was looking at it at the close of the day, my stop would be far away. If I identified it intraday, then I could short it using ETF intraday somewhere here. But if I was analyzing it at the end of the day, which I did in this case, I'm in the opposite time zone. Sometimes I don't stay awake at the night. So I identified the short trade not near the morning session, later, sometime later, maybe near the end of the day. And I did not want to short using ETF because the stop would be far away. I would not short using put options, naked puts, because the volatility would be very high and put options would be overpriced because of this sharp drop. I didn't want to buy overpriced options naked. So the instrument of choice that remained was to use long put vertical. Long put vertical would be perfect because the out of the money short leg of the vertical would be even more expensive than the in the money or at the money put options. So I initiated a bearish trade in IWM when I shared the idea at that time using long put verticals that had delta in my favor. I was bearish. It had a go with flow short setup and that had volatility also in my favor in a way because I could buy one option and sell a more expensive option in terms of volatility. That is how I traded IWM and that trade is in a profit now. You see, I closed my SQQQ long trade, which was actually QQQ bearish trade, because that was not the lowest risk position at that time. It had trend line nearby. And instead, I shorted IWM where the next support would be the lower boundary that is far away. The watermark is not a significant support for a stock that is already in a downtrend. Watermark is a significant support when it is moving sideways, but not for a stock in a downtrend. And IWM was already in a downtrend when it came here. So here the logical support would be the lower boundary. In any case, even if it comes to the watermark support, I think my options position will reach 50% of the possible profit, and I have already put a GTC order to book profit at that price level. So two trades I took on the market, one on QQQ bearish trade, actually SQQQ long trade, which is QQQ bearish trade, and IWM bearish trade. Both are already in profit booked mode or working out quite well. IWM I will not short now because I have already shorted. None of the market ETFs so far are bullish enough to buy. Last ETF remaining is DIA. This is also in an uptrend. You see, many of the ETFs are still not in a downtrend other than IWM. DIA is also in an uptrend. but I was not going to buy, as I explained in previous webinars already. And you also see there was a bearish headwind, an uncanny signal, you may say, caught the very high once again. In fact, this bearish headwind came in Dia when it made an intraday all-time high. What else did we have at that time? Let's clear the chart and read the chart carefully. Had a bearish headwind at intraday all-time high. Price closed sharply lower with a bearish shape candle. Traffic light color changed to neutral. Closed below the watermark pivot resistance, thereby creating a false breakout. At the same time, it created a reversal candle at pendulum high. It was associated with very high volume. It had a bear release signal. So it met all the requirements of box short setup in the daily, and in addition we had a bearish headwind signal. Looking at that, on that day you could take a short trade in Dia. Did the weekly confirm the box setup? No. Weekly didn't confirm the box setup, that is double top shorting setup. Why? Because the weekly color was not yellow. However, we had some additional signal in support of bearish trade, that was bearish headwind, that was reversal at pendulum high. So you could take a short trade in Dia, but I did not, because I already had successive short trades open, once in QQQ or SQQQ really, and then IWM. Now if you compare Dia with IWM, which one was weaker? Of course IWM was weaker, and they are both market ETFs. So if I was going to short the market using ETFs, there was no reason for me to use Dia, which was relatively stronger. I would have, should have, and actually did use IWM, which was the weakest of the market ETFs. How could I use the bearish signals in Dia? If I had a long position in Dia, which I did not, if I had a long position in Dia when the bearish headwind came along with all those signals, you could protect profit right at that point. That was a look at the market ETFs. Other than IWM, none of the market ETFs are actually in a downtrend. That is interesting, isn't it? I am in several chat groups with USA market and also global market traders for in other groups. I see many people are talking about loss or not finding trades. I don't see any reason for that. I shared several trades, not only market ETFs but stocks also. They all, I think all of them, hit the profit target or are in profit by now. Why is this difference? Why other many traders are not finding trades? Why I am able to find trades? And probably if you are using Q systems, you are also able to find profitable trades in this market. Why is this difference? The difference comes from the fact that Q traders, including myself, we are willing to take long trades and short trades both. That is one reason. There are few other important reasons also. Some people are only high growth stock traders, and on top of that, they are very particular about what kind of high growth stock they want to buy. I am not so particular. I take trades based on valuation and growth both, and my criteria for earnings growth is different from many of those other high growth traders. Because of those differences in requirements, I am able to find plenty of long as well as short trades and share them publicly before knowing the result which are hitting the profit target. Let's look at some of them. It's important to go back and look at the analysis sometimes. It's called post analysis to see what we are doing right, what I am doing right. It seems plenty of things I am doing right. My website, yes. But let's look at them. Let's look at UNH. Let's look at, this is a stock NBCC in India, not closed yet. IWM, I already looked at it. SQQQ, I already looked at it. ALKE, let's look at that in India, no problem. Citibank looked at it. ONGC India looked at it. See what I'm doing? I'm not picking and choosing. I'm choosing all of them one by one. And let's spend a few minutes on this today. It's important to see how we are able to find trades in this market that are hitting profit target. I would say very quite easily. Nothing is as easy as walking in a garden of rose, but once we have a systematic approach and follow that with discipline, there is no reason not to make some profit. Let's look at all these few trades, and I will look at APD also that I shared. Not hit the profit target yet, but let's look at them one by one. UNH shared 5 days ago. You can see it from here, Jan 3rd. This is what I looked at that time. Remember, my analysis is as of the time I shared it, not after the fact. That's a very, I think, very important difference from some other people sharing who share trades after booking profit, saying that I bought it on that day. Then I could have hundreds and thousands of charts shared showing how you could have made profit. But these are all shared before knowing the result. That shows the true strength of the systems and techniques. On Jan 3rd, you see its morning session, 10:10 Eastern Standard Time, AM. I saw managed healthcare was very weak. Relative score was gradually coming down. In terms of fundamentals, the stock was down, valuation was in the middle, had earnings growth. 73% of peer stocks were down. Fundamentals were not very weak, but as I mentioned, for bearish trades in stocks that are near the top, I am okay to be flexible on the fundamentals. So UNH allowed me to short, and what setup did I find? Right on that day, at the very top, I found a breakdown short setup. Traffic light color, daily candle color was bearish. It broke below trend line. Resistance, not resistance, broke below trend line support, and it had a serious bearish trade because the drop was the biggest drop in 1 month, and that was happening at pendulum high. At very high point, I am willing to be flexible with the fundamentals, so I shared the bearish idea at that time. Let's look at UNH today. Going to use the live chart now. I shared the idea on this day. I in fact took the short trade in the morning half. There was a trend line support here. In the morning half, it came below the trend line support, but in the afternoon it recovered, but I already entered the short trade. If you are looking at the close of the day, you wouldn't take the short trade, but very next day using fine tune, you would have entered the short at around the same price where I entered the short trade. And then it fell like a rock. Hit the profit target, lower boundary as well as the yellow direction line. So I am already out of the trade. Not a difficult trade. And see here, I had a bearish view on the market. Then I aligned the industry's weakness and technical weakness at very high price level, shorted the very top. I don't think many people are comfortable, one thing, and second is confident enough to short the very top as I did in this case. Profitable trade. Okay, that was UNH. Let's look at some others. This was India, doesn't matter. whether it is USA, India, so long as liquid stocks, we apply the same technique. This I shared 17 days ago, December 22. Pharmaceutical stock, the same approach. The industry score was rapidly improving, allowed me to buy. Then I found this stock that was steadily going up, strong earnings quality, medium valuation, some earnings growth, funds were accumulating, and see the strength of the industry in itself. 94% of peer stocks were up, and this industry in India also has a lot of stocks, 49 stocks in pharmaceuticals. 94% of them were up, and if you are following not only in the USA market, also healthcare pharmacy stocks, not pharmacy, pharmaceutical stocks were languishing for a long time. So I looked at this and I was willing to buy, looking at the fund accumulation as well. And then I looked at the chart, one of my favorite setups, isn't it? ALKE India, Alchem, weekly trendline support, daily. It was about to break out of the trendline resistance. That's one of my favorite setups. Weekly trendline support, daily breaking out of trendline resistance. Daily had plenty of trendline support. It found the support and just about to break out. That I shared 22nd December, right? Let's look at the stock now. ALKE.NS. Sorry, let's look at the symbol again. ALKENS. Okay. Okay, not able to retrieve. Let's see if I followed up the post. Yes. 3 days ago, I followed up. Let's look at the chart. I suggested the breakout trade at this point. Then my initial profit target would be the upper boundary, which was hit on this day, and I was out of the trade with GTC order that I had placed with the broker. All our short-term trades, once the risk distance is covered by the reward, I book profit, at least partial profit. So ALKE also exited with profit. Next, look at this stock, Citibank, USA market, shared 16 days ago, December 23rd. Let's look at the analysis at that time. And this was a step-by-step explanation of how I found the trade. I looked at Q Sonar on that day. I saw a lot of breakouts. I looked at Q Edge, sector industry stock advanced decline breadth. That was bullish here, and the strongest sector at that point of time, everything done in real time. This was 9:52 a.m. Eastern Standard Time. The strongest sector on that day in real time, all 11 sectors were up, but the strongest one was financials. So many breakouts, financials was the strongest. Then I found diversified banks industry, which was very weak relatively earlier, and then it was not only one of the strongest industries at that time on that day, 10 a.m., but it was also one of the most accelerating industries. So I wanted to buy some diversified bank. I found Citibank steadily going up for 2 days, 1 days, and real time on that day. Undervalued stock with earnings growth. This is what I mentioned. This is also high earnings growth for 3 successive quarters. So to me, using Q guideline, this was a 3-star candidate that is having earnings growth in last quarter, last couple of quarters in fact, but I just required last quarter earnings growth, and it was undervalued. So 3-star candidate, and see the industry strength. We saw the relative score was high, but see the in itself strength, 100%. So many peer stocks, 52 peer stocks, all of them were up on that day. So I wanted to buy Citibank. I looked at the chart, again very close to what I like to buy. At weekly trend line support, breaking out of daily trend line resistance. On top of that, we had a bullish headwind reversal signal few days ago, had a bullish indecision, had a bullish pressure, and this was happening at pendulum low, breakout from pendulum low. In the alternate charts, we can see it was a jump thrust low that was too extended to the lower side, from which a recovery was likely. So I found this breakout trade. I shared it publicly before knowing the result. And notice again one thing, many people are not comfortable shorting the top like I did for UNH, or buying the bottom like I did for Citibank. It was clearly in a downtrend. Many people will not buy it, but Q systems have very powerful reversal signals. Headwind, bullish indecision, has powerful, effectively used, very effective trendline support resistance and oversold indication, extension indicator to the downside. So I could share it and buy Citibank. That was as a breakout trade 16 days ago. What was the day? Let's look at the day. 16 days ago, December 23rd. Let's look at Citibank today. I shared it right at this point, isn't it? A few days after the bullish headwind appeared, then it comfortably went up, hit the upper boundary, covered much more than the risk distance by this upswing, and I am already out of the trade. Was it difficult to locate these trades? No, because I not only identified them, I shared them confidently. Of course, I didn't know all these trades would make profit, but I have seen if I keep on repeating this approach, 360 degrees identification long short trades, they tend to work out quite well. You know that from these shared, these ones I am highlighting, reviewing again, and you could go back and see all the analysis I shared in the past. Now let's look at the next stock. I think it's good time spent today looking at these ideas when people were struggling to find trades. Almost all, we'll see if all or not, almost all at least, but maybe all of the trades I shared are in profit. This I shared 8 days ago, December 31st, ONGC in India. Doesn't matter, same approach. The industry, integrated oil and gas, was weak earlier in real time. Again, for India market, for global markets, these tools are used in real time. 31st December, I saw the industry score relative to others improved, and it was also accelerating. Two reasons to buy some stocks in this industry, and I found this stock crown jewel. I call it crown jewel because it was undervalued with high earnings growth, with high revenue growth. On top of that, funds were accumulating. And see again the strength. Okay, not many stocks in the PR, so 100% of the stocks were up, but in any case, fundamentals were great in terms of valuation, earnings growth, revenue growth, funds accumulation, and look at the dividend yield, 5.23%. In India, the fixed deposit interest rate is probably below that or around that now. So just in terms of dividend, it was worth buying, and there were many other fundamental reasons. Industry was accelerating, was strong. And let's look at the chart. What trade setup did it have? Close to what I like to buy. One of the setups. Near trend line support in weekly, near trend line support in daily, breaking out of trend line resistance in daily. I bought it right at this point. It was still in a downtrend if you look at the daily, isn't it? That is the beauty of the Q approach. We can find different setups, but all using colored charts, not numeric tables to decide what to do. By the way, if you remember my earlier market recap, when Nifty 50, India's index that I study every market recap, it broke out just like this way from trendline resistance in, sorry, broke out of trendline resistance while it was in a downtrend. For Nifty 50 also, I mentioned that I would be buying though it was in a downtrend, and the same pattern I found in ONGC. So this was my buy point. I bought the stock. Let's look at ONGC now. That was shared 8 days ago, December 31st. Not sure if I am able to open the Indian stocks now. Let's see. ONGC. Yes. Where did I share the idea? Somewhere here. That was a breakout from trendline resistance near trendline support. Where was my initial profit target? Upper boundary. So I had my GTC order placed with the broker, hit the profit target. Was it difficult to find? No. Well, that was ONGC. Let's look at the next one. Big lots. Coming back to USA market. 9 days ago, December 30th. What was the 360 degrees analysis? Why I call it 360 degrees? Because I am looking at all the angles. Of course, I look at the market. My market view has to be aligned with the trades. I don't repeat the market view in every post, but other than the market, I look at the industry fundamental technical, completing the 360 degrees analysis. What did I see in big lots? Relatively very weak earlier, one of the strongest in real time, again in the morning session, 9:45 a.m. Eastern Standard Time, and it was also accelerating. General merchandise stores allowed me to buy. I found this undervalued stock. Negative earnings growth, that's fine. The undervaluation allows me to buy. Remember, I mentioned the difference in Q approach with some other techniques is that I am and Q traders in general are able to buy not only based on growth but also based on valuation. And this is short-term trading, swing trading, average holding period. As you can see from all these examples, average holding period you would have found to be around 5 days. The stock was steadily going up. Undervalued stock. See the strength in the industry. 92% of all these 13 stocks, big lots pairs, were up. So in itself, the industry was also very strong. Fundamentals allowed me to buy. And what did I find in the technical charts? Weekly breakout from trendline resistance, daily breakout from trendline resistance. Weekly created a false downside breakout. Weekly had a bullish headwind that caught the bottom perfectly. It retested the same low and went up, broke above trendline resistance with backdrop color being bullish. We also had bullish indecision. We also had bull release. Those were in the weekly, I call backdrop chart. In the daily entry chart, of course, we had the same false downside breakout. And right on the day I shared it, it had a breakout from trendline resistance that was happening at pendulum low, and it was coming out of a squeeze. That is also an important criteria to notice. It's not a part of checklist, that is not a mandatory condition for taking a breakout, but it's very useful to have a stock breaking out from a squeeze. So it was a squeeze breakout and trendline breakout. That is what I shared on big lots 9 days ago, 30th December. Let's look at big lots now. BIG. I shared it 30th December, so this day. I shared it on this day. It broke out of some trend line resistance at that point here. So here, I shared it on this day. The candle closed with an upper tail, but I'm in the opposite time zone. I might have taken the trade in the morning session, placed my GTC order for profit taking stop loss, and I fell asleep. At the close, you would not have taken the trade, but you could take the trade next day or next day using fine-tune real-time chart. In either case, you would have entered the trade around the same price like I did when I shared the idea. Didn't go up much, and comfortably it hit the upper boundary in a few days. That was my initial profit target. In fact, it hit the white direction line also. In any case, my GTC order was in the market with broker, so that was executed. So big lots also exited with profit. Okay, that's good. Now let's look at APD. This I shared on Jan 7th, so maybe Friday. Is it Friday? Yes, it's on Friday. Let's look at the stock. In the morning session, 10:30 a.m. yesterday, I shared APD analysis. Its industrial gases was weakening with deceleration. So I could short APD. This stock was steadily coming down. This is fundamental analysis using Cube Vital. It was overvalued, so it allowed me to short. 52% of peer stocks were down, but relative score was already allowing me to short. Relative score I found from the previous snapshot. So fundamentals and industry both allowed me to short. And what did I find in terms of technicals? Breakdown in weekly with a bearish shape, bearish color in weekly. Breakdown from trendline support in daily with bearish shape, bearish color in daily. And interestingly, earlier it tried to go above the trendline resistance. These trendline supports and resistances are drawn automatically drawn, and I like to say smart trend lines. It created a false upside breakout at the trendline resistance, then broke below trendline support. We also had one indecision at the top here, bear release signal here. So we could start to look for shorting opportunities from the top. But I did not share the idea, neither did I take the short at that time. But it broke down below the trendline support. That was the time I shared the idea. And looking back, it also had the biggest down move of 3 months that came at pendulum high. As I have shared many times before, when you see biggest down move of 3 months at pendulum high happening in a stock that is at a relatively high price, of course it's relatively high price because it's a price extreme or pendulum high, then the stock is more likely to go down. You could in fact short it right at the top. That I didn't do, but I identified it as a breakdown trend, and I shared it on Friday in the morning session. It's still in play. I don't know how it closed. Let's look at it. APD. Okay, it closed above the trend line support. So if you did not take the short using intraday fine-tune chart, real-time chart, you wouldn't short it at the close because the breakdown setup did not confirm. It went back above the trend line support. If you entered the trade with intraday charts, then you are already in the trade. On a closing basis, you wouldn't enter. This trade is still in play if you used intraday chart. If you use closing price, you wouldn't take the trade. Now, those are the trades, and you can see every trade that I shared in recent days, either in long direction or short direction, hit profit target. Not only that, let's look at some more stocks. In the same industry as UNH, I shared Humana, and these were shared in the previous roundup when I was looking for some trades, and I identified Humana, bearish headwind at watermark resistance, at weekly trendline resistance, and then I think it was coming below one trendline support on this candle. That was a short setup I identified in the previous market roundup somewhere here, and see how it dropped. Humana shorted the top, easily booked profit. And the same industry had another stock. Unlike Humana, it was not at the higher price, but it was already in a downtrend. And I mentioned that while analyzing, I analyzed it around here. And I mentioned if it went down from here, that would have given a go with flow trend following short setup. So that setup was confirmed here. It easily covered the risk distance. So by Friday's close, you would book partial profit if you're following Q guideline using GTC order. Bearish trade, booked profit. SQQQ, I already shared. APD, I already shared. Now I'd like to look at two more stocks. They could be bought on Friday. Could be. But before that, why am I also sharing buying ideas? Not many people are buying, right? I shared many shorting ideas and several buying ideas in India, USA, all hit profit target or are working out quite well. Now, why I am willing to look for buying candidates? Let's look at that reason. Let's look at the market from few other angles. I looked at the market ETFs. None of the market ETFs are in a downtrend except IWM. So there is some reason for buying. Also, several market ETFs I showed are near trendline support, including SPY. There is a case for buying also because of the trendline support. And let's look at the market from few other angles. Very useful sector, industry, stock, advanced decline breadth, 1 month to 1 day. It's not that bearish, isn't it? Overall, if you see the entire period, 1 month to 1 day, yes, it is slightly more bearish than bullish, but not much. You can say it is more or less in the middle. Slightly more bearish, but not overly bearish. If I look at the bucket analysis, 57% of S&P 1500 stocks are above mid Bollinger Band. That is bullish. Is it overbought? No. The percentage of stocks in the uppermost extreme bucket is nowhere close to 30-40%. It's only 15.6%. So it is bullish from bucket analysis perspective, but nowhere near overbought. That allows me to buy. Now, if I look at technical breadth, balance between bears and bulls using weekly interval first, yes, similar to sector industry stock advanced decline breadth, is more bearish than bullish, but not too, it's actually bearish, 61% bearish all signals, but still 39% of stocks are still bullish in the weekly interval. Reversals are very much bearish, and that number is also large, so I am happy to take reversal trades in stocks that are at a high price level. Another reason to do that is that if you see the weekly bearish headwinds percentage, it is quite high, 2.7%. Whenever it goes above 1%, I have seen market as a whole as a tendency to come down. So overall market, I am not bullish. However, there are some technical trend line support in several market ETFs, so I'm not very happy to short also now. But the bearish event is telling it may fall, maybe after a few days, I don't know. But there is a case for looking at shorting stocks that are at a very high price level. And if I look at the daily interval for making immediate trading decision, all signals is very mixed, 50-50. So there is a case to buy stocks as well. Those are the reasons I am willing to look at buying opportunities. And let's look at two stocks. Again, you will see they are using trendline support resistance a lot. VIAC, Viacom. Now, many traders are not comfortable buying the bottom. And if you compare this pattern with the pattern, especially looking at the weekly pattern is a stock in a sharp downtrend breaking out of trendline resistance. Isn't that the pattern I found in Citibank, or I think in certainly Nifty 50, and also I think in ONGC in India? I'm quite okay to take this swing trade, short-term trades, and looking at weekly Viacom, broadcasting industry, is giving a very clear breakout setup. This was a sharp breakout. And yes, there is a daily trendline resistance. So I might have taken partial position in Viacom on Friday. If it continues to go up, that's great. If it comes down, I am thinking most likely it will create a higher low and go up. And if that happens, I'll add to my position at this point. So this was using trendline resistance. But before sharing that, I did look at its fundamentals and industry strength, and you will find something interesting from there. Viacom. Let's look at the fundamentals using Q Vital real-time fundamental and peer analysis tool. No data is stored here, so it's going to connect with Refinitiv, get the data into all the calculations. What kind of stock is it? It's a value stock. Again, I mentioned there are several traders who only want to buy growth, and their growth criteria is very different, somewhat different at least. So they are not finding growth stocks. I'm finding growth stocks, I'm finding value stocks. This is a value stock, undervalued. Secondary valuation is also great. Well, insiders are buying if you want to put weightage to that. There is a short squeeze potential. 73% of peer stocks went up. That's a big percentage considering that this industry was languishing. And if you look at the relative score, you will like it even more. Relative score of the industries are seen from the relative score table in QH. Is the best performing industry on Friday. We have 148 industries in the India, sorry, not in the India, in the USA market in QH, and broadcasting was the strongest of all, sharply gaining strength. If we don't buy in an industry like this, which industry do you buy? This is a clear turnaround candidate in terms of industry strength and a sharp breakout candidate which is in sync with an industry turnaround. So Wacom, in my view, it's giving a breakout setup. And again, I probably would not like to buy full position because it is near a trend line resistance in daily. If it breaks out of that, great. If not, if it pulls back, I'm expecting again a higher low, and at that point I may buy more. Now let's go back to QH. Let's look at all the industries. How did I find Viacom? I actually found Viacom using the top-down analysis. I looked at the industries, sectors I see, but my primary trading decision is based on industry. Broadcasting was very strong. I found Viacom from that, and I noticed this industry, hotel and resort rates. Can you see? It was very strong, whereas it was very weak earlier. Again, a turnaround case for industry, hotel and resort rates. And unit corporation, let's look at the fundamentals. This is a 3-star candidate, isn't it? To me, it is amazing how other people are struggling to find trades or hitting stop loss. All these trades I'm finding and the ones I'm sharing, they're doing quite well. Amazing difference, isn't it? Good for me. What can we see here? Undervalued stock with very high earnings growth. Funds are accumulating. dividend yield of 4.6%. If we don't buy that kind of stock, what will I buy? In Q technique, it's a turnaround candidate in terms of earnings growth, undervalued fund accumulation, dividend yield 55% of stocks are up, and the industry, let's look at the industry from Q edge again. Okay, the industry is not very strong in terms of relative score. However, it allows me to buy because of this unique feature in Q edge. I am able to buy either based on strong score or based on strong acceleration. This has acceleration, so I'm allowed to buy in this industry. That was unit COP, 3-star candidate. And now if I look at the stock chart, in the weekly, it is close to the trend line support. In the daily, it is right at the trend line support. In fact, closed above previous day's close with a bounce up, with a bullish indecision. Now it does not have a bullish pressure, neither does it have very high volume. So it did not confirm a bounce long setup because of that. If we had bullish pressure or very high volume in the activity bar, then we had a confirmed bounce long setup. We did not. But I am expecting, looking at these two charts, one of two things. One, price will continue to go up and hit the trend line resistance, which will be my initial profit target, or even if it comes down, I'm expecting this trend line supports in daily and this support in weekly to hold. So if options were liquid, what could you do? You could short the put at the trend line support, one of these two. If options are liquid and you get a good premium. Or you could do short put vertical, or you could take a partial position, not full position in the stock also. Why not full position? Is because it did not confirm the bounce setup in terms of the checklist requirements. But this stock looked interesting to me, and funds are accumulating. That is something good to keep in, something good to have aligned in your trade, aligned with your trade. So I found these two stocks, one based on industry acceleration, one based on industry strength. And if you look at QH, let's go back to QH. Let's look at the industry percentage change yesterday. I know it is 10 minutes past 1 hour. I will probably need 5 more minutes. Look at the industries. Broadcasting is of course the best performing industry, and there are several industries that are up by more than 2% in one day. So we cannot say that we are not able to find buying opportunities in any industries. There are opportunities, and you may drill down from these industries and look at them. Now, quickly, very quickly, let's look at the market risk total view. Any signal from there? Let's look at the percentage of stocks above 50 MA for the market risk total view that is calculated from the two composites and four major indices, Nasdaq NYSE composites and Russell 2000, S&P 500, Nasdaq 100, Dow Jones Industrial, four major indices. In the previous weekend webinar, I showed that the percentage of stocks above 50 was at 50% level, has not changed. So it was in a downtrend, recovered to the midpoint. If it goes down, it will be bearish. I will not look at all the signals here. If we look at accumulation distribution, we had two distribution count 3 days ago. They came from Nasdaq. Nasdaq was weak for a while, isn't it? I showed that in the previous webinar also. And Russell 2000. Isn't it nice that I have a short position that I shared publicly on IWM? Russell 2000 had a distribution count. In fact, I shorted QQQ using SQQQ. That was also aligned with the Nasdaq distribution that came 3 days ago. Last 2 days, nothing, no Hindenburg. We don't expect a Hindenburg. Usually don't expect unless it goes to new high. 3-month new high low right in the middle. No signal from there. Growth doing poorly. This magenta line, growth versus value, now starting to go down. Earlier I showed it was going up, so growth was doing better. Then I mentioned in the previous 1-2 webinars it was flattening out. Now it is clearly rolling over, clearly in downtrend in the last couple of days. So growth is doing worse. And remember that few stocks I shared just now, Viacom, Unit, they are undervalued stocks. I am aligning all the forces, growth versus value coming down, value doing better. My buying opportunities I'm identifying, they are actually value. And APD, if you remember, Air Products, I shared a bearish idea on that. That was overvalued. So that's good. That's also aligned with this analysis. And small cap versus large cap, overall you can say it is coming down. It's good that I have a bearish position that I shared publicly in IW. I'll not look at the Nasdaq NYSE to save time, but let's look at the mega caps. What did I share in the previous webinar? Mega cap was here, right near trendline resistance. And I mentioned in the previous webinar, it was in a narrow range. I was not going to trade anyway. But this mega cap index I showed in the previous webinar, I mentioned that if at all I traded, I would prefer bearish direction. That came true. It hit the trendline support, but it is at trendline support. That's a reason not to short right now. The same reason was true for SPY also. And if I look at the leader index, this is an index created from the strongest of the strongest stocks. I got the stocks from Dr. Jeffrey. The strongest of the strongest stocks. They are not so strong now. It's gradually coming down. This copper color line, relative performance coming down. But it is also at trendline support. So a reason not to try to short these stocks now, constituent stocks. Many of them may also be at trendline support. So you can now see why I am not averse to buying, because several of the analysis from very different angles, from leader index, from mega cap index, from SPY. Let's look at SPY one more time. Well, QQQ also near trendline support. Let's look at SPY near trendline support. So many instruments that affect individual trades in general are near support. So I'm not averse to buying, and the stocks to look for buying maybe non-small caps from a high level analysis, because small cap versus large cap, small cap is doing poorly, and value stocks, because value versus growth, value is doing better. As these live examples show, confirm is what I always say, there is no reason not to make some money from the market, whatever market it be, USA, India, China, Hong Kong, all the large liquid markets. You may apply the same approach in all these markets consistently, book profit within 5 days using swing trading. That's it for today. Thanks a lot for joining me. My next public webinar will be next weekend. Have a great weekend. Keep safe, and no reason not to do that. Trade profitably. Thank you.